Hello to all traders and welcome to another Elliott Waves on Cryptos. It's been over a week. It has been an exciting week. FOMO is at overbought levels, let's say. There is news around ETF, which is not really backed by the um, the cryptocurrency BTC. Just for those of you who do not know that, it's similar to the CME that has been existing for years now. That was a small parenthesis anyway. We are moving higher. We have retested and tested the 60K. And you probably wonder what is going on? What is this crazy guy again going to show us? Is he going to show us a bearish outlook? Has he changed his view or not? Guys, I want to make another small parenthesis and tell you that what I am showing you on my charts, it's educational. Okay, we are looking, okay, at probabilities based on price action combined with volumes. Okay, the fact that I have a main count as a bearish count, it's because price action in the longer medium term, medium to long, suggests that we are still looking more favorable at this scenario, without that meaning that the other scenarios are not in play or they're not going to happen. We are, and as you're going to see fairly soon, with the correction in mind, that we are nearly 90% we are there to break and consider this as a bullish continuation. But we're not just there yet, okay? We're not at the previous stop. There is a moment that a lot of the scenarios that we're going to see here today have fairly small difference between one another in terms of probabilities. Okay, so whatever I want to show you could take place, could happen. Okay, so hold on to your thoughts there. And let's jump and have a quick look. Before we do go in the charts though, I want you to remember a couple of things. None of this is to be considered investment advice. It's educational, okay? And there is no intention for a buy or a sell signal coming from my side. The second thing is that, as you will understand, and I do know that most of you think I'm bearish. I'm actually not bearish. I'm just analyzing the markets, and it takes a week usually to come back. For that reason, you probably think I'm bearish, but within the week, I turn bullish, I turn bearish. And the only way for you to know and have these information and insights is to join my Telegram channel. Okay, this is a paid subscription, of course, but you're more than welcome to trial out and see how it goes. A lot of people have have done well. Okay, so you can find my details on the about section. Send me a message on Telegram, and we can speak on that end there. Now, the core binary cycle community has voted. Okay, this week the vote has been hard. Fairly close results between BNB and also Matic. As you know, they all explode. 18 and 18% between DOT and BNB, 17% for Matic. We are going to have a quick look at BNB and DOT today, two of them, plus BTC. So this is going to be a lengthy video, I would assume. So take note and pay attention to the comments. Guys, I want to start with BTC as always, and I want to start with like clear charts. Okay, I want to show you quickly some basic technical analysis, okay, and understand that, you know, where we are, what's going what's going on here and what are the chances from a simple TA perspective. First of all, I want you to know that we are at a very critical level. Okay, this is the April drop candle, and this is the open of that candle, which is what we're currently retested. This is it's called a high momentum candle. It's very important. You can assume that all profits have been taken from that short. Okay, the moment that we do the 100% cycle, that's what you can assume. Now, this is really to be played at this level. Okay, in case we break that 60, it's very likely we're going to go for a fresh high. If we don't, it's very likely to start following either a pattern of continuation or to the downside or a correction. Then we'll have to, of course, look at 52.85, and the other high momentum candle over in May is the 56.67 or so. Okay, these are very, very critical levels going forward. Of course, on the upside, after 65, there is literally nothing. It's price discovery, which means even 1 single cent above that level could trigger a bigger correction than this, or just a pullback. We do not know. We can never know how the markets are going to react. Okay, so don't think that the 65 break, because we are going to talk about this, the 65 break is going to, because it's 100% retracement, is going to trigger more buys. Okay, I mean, only retail buys the top, obviously, you know that, right? No institution is going to buy the top. CME, no CME, whatever that is. Okay, now traditional technical analysis shows that we have a head and shoulders here. Okay, left head, shoulders, very huge head, but whatever, doesn't matter. We have crossed above that area, managed to remain for a few days over, and also retested that area. That has become now a support. So we need to pay attention to that level. If we break lower, and then of course past the 52.85, there is chances for a correction or even a reversal to the downside. But as long as we are above this trend line, guys, the trend is bullish. Okay. Now, what else we can do, since this is my 1 and this is like a 3 or a C or whatever, we need to connect these two to fix an acceleration channel pretty much here. Okay. And you see that this line comes pretty much at the same level as the head and shoulders line. And as long as we're above that level, again, we remain bullish. Can we reach that level? It's possible. We will find out soon. Okay, that means we really need to break this 60K resistance, which is huge. The next level up, by the way, it won't be the top. It will be this left swing high, 61.70 or 80. These lines I'm using are quite fat, so leave a divergence to 300, 500 euros. Dollars. It doesn't make a difference anyway in these markets. So I wanted to show you that from a simple TA perspective before we jump to our BTC main count here, and it hasn't changed. Many of you will not like this, but it's what it is, guys, and I will tell you why. Okay, first of all, we can look at logarithmic or non-logarithmic. Okay, the logarithmic is bringing us the 90% of this correction. The non-logarithmic is bringing us to about the 86% of this leg, I would say. Now, you might ask, why am I still looking at this as wave B? Is simply because it can be a wave B. Okay, and because we haven't crossed above the previous high, and because we have a 5-wave move to the downside here, and we need another leg to complete the correction in wave 4. There is many reasons which I have always repeated, and I will keep repeating as long as evidence shows us otherwise. And I've just talked about that evidence over the past few minutes. So log, non-log, it's up to you. But non-log fits a less bullish scenario, or I would say maybe even a more appropriate scenario. The log, no. Why? Because as long as we are in around the 85-86%, we can have a wave B. Okay, usually wave B retraces to around the 79 to 80%. Actually, a B in a simple correction goes anywhere between 38 and 79, but a divergence can be expected sometime. Okay, so it can be okay, which means that if we break that 60 level, then that is invalid. Okay, that is invalid. So what is for now the case is that we have 3, we're waiting for 4. This is an A, B, C simple correction. My wave B is a W, X, Y, X, and Z, the triple zigzag. Okay, we're gonna go on the short term later. Now, if we break past the 60, okay, or if we bring the log back, wave B of a flat is usually the 90%. Then we have to, though, change this structure and make it an ABC. And ask ourselves, does this make sense as an ABC? Well, it doesn't make sense as an ABC, guys. You are going to see something like A, B, C from very famous analysts, and this is so wrong. There's no truncation here. You have a lower low. You cannot assume or add a truncation here. I'm completely against that. There's no truncation here, okay? Just to be clear. There is a truncation, but you cannot just stick it there and enforce it, because you have another low. Not just one, you have 3. 1, 2, 3, 4, 5 days closing below that low at a different points. Okay, so you know, either way. So what this means is that, you know, the only case that we can have a flat here is that to enforce an ABC here. So I don't like enforcing anything. And that's why I don't have this as a 1, 2, 3, 4, and 5, and I have this as a triple zigzag due to these volumes. Okay, and I'm gonna speak about that in a minute as well. Just hold on 1 second. So no flat. It is a triangle. Triangle is possible, but again, same probabilities, because we do not want to enforce an ABC over here. We want to leave that as a 5-wave move to the downside. Okay. So that brings the question, what is a pattern that has high chances now, probabilities breaking above that, or even, you know, even not breaking is still highly possible? If you remember a few months back, I've had this as a 5-wave leg, part of an expanded flat pattern, right? A, B, and C. And I've had these as a W, X, and Y for a long time. I only changed it a few weeks back, purely only when we got this ending diagonal here, because I never liked this ending diagonal as an ending diagonal. So I had this as an ABC from the beginning, okay? And I only said and promised that in case we get a similar look in ending diagonal, it means that structurally and fractally, we are, historically speaking, we can match that data to previous historical pattern. That's why I've changed it. Now, though, that scenario comes back into play with high probabilities. Okay, so that is expanding flat wave W. This is W, X, and Y, Z again. Okay, for X though, not B, and we're gonna get an ABC for wave Y. Okay, same completion below wave A. Now, with that being done, okay, and if that is an expanding ending diagonal, it means that as well, we could have finished wave 4 over here, okay? That though assumes something else that we enforce again, something that I have never been a fan of, and I've been telling that throughout all my videos. It assumes that we are in 1, 2, 3, 4, and 5 over here, okay? Or perhaps even 1, 2, 3, 4, and 5, and we ended here for 1 and 2. Or my 1 is going to be here, right? And my 2 down. I never liked it, not because of the pattern, although the pattern doesn't look here in wave 2. But it's highly possible to get it to like this. I don't like it because of the volumes, okay? You do not get trend reversals with these volumes. They are pathetic, okay? They are pathetic. So the only case an alternative case that wave 4 is done here, and this is going to be a move to the upside, yeah, is that if that is 1 and 2, that is 3 and 4, and we're going to get 5, or 5 ended 1 and 2, and this is only, it's either wave 5 of 1, or it is wave 1 of 3. And let me quickly make you that point, but make that a bit more clear. 1 and 2. And we'll start 1, we're going to get 2, then 3, then 4 and 5 of 3. Then the 4th, and then the 5th. Which again suggests that we finish down here. I put these two alternatives in the same category. They both have similar cases, similar probabilities of happening. I'm more leaning towards the first alternative will be that this is 1 and this is 2. Okay? The first alternative. Now, since though we assume that this is 1, 2, 3, 4, and 5, or this is 1, 2, 3, 4, and 5, yeah, we can equally assume, with no exaggeration, that this is 1, 2, 3, 4, and 5 of A, okay? And this is a B, yeah? And this is a C. So we'll go back to, this is a corrective wave B, okay? Or if it's part of the W, X, and Y, it's just an ABC in Y of X, and then we'll get the Y again, you see? So if you look at it in that way, yeah, by enforcing counts that have lesser probability, new counts have to come up, right? Because one assumption, allowing one assumption, then, you know, you have to look at the charts again and see how does this change all the other alternatives. So you can understand that we are at a very, very, very critical point, okay? The best scenario for bulls is that if that is 1, 2, 3, 4, and 5, okay? And that is 2, and we start wave 3 now. Okay, and that would be 1 of 3. We get 2 and then shoot higher. In either case, I see a correction coming in anyway. So we will only know like a few weeks down the line, unless if we see like a huge candle, like 10K up or down, then that's going to make things a bit more clear. But if we see a 10K candle, guys, it's more likely going to be to the downside rather than the upside. These volumes suggest there is no retail in, okay? Some FOMO has been recently coming back in because of the news, some retail came in. If you see volatility here remains huge. Liquidations are ridiculous. Exchanges make billions every time we have a huge candle. Billions in profits, okay? The market is so manipulated you cannot understand if you do not know the markets. Either way. Now, I said about the most bullish scenario. There is another scenario that is very, 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 very bullish, okay? And this is a scenario where this is a leading diagonal, okay? So you got something like a move, actually no, excuse me, that cannot be there because we have a fresh low here. So it could be this and this. Well, it can be the case. Actually, if we break below 52.86, but manage to stay above 40, it's very likely we're gonna get ABC, 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 and then ABC. That is going to be a leading diagonal, okay? That is going to be crazy bullish. But again, we're not going to know in a few weeks' time. Okay, so that's all on BTC, guys. Now let's go quickly on Binance, and then we're going to do DOT. Okay, I'll try to be quick and not talk about many alternatives. Okay, so looking at Binance, Binance is also well, there is two scenarios here. One is bearish, one is bullish. I would want to say that both have similar scenarios, but I am leaning towards the bearish one, but marginally. Okay, marginally. First of all, we started when it started. We are in wave 3 and we'll go for wave 4 or wave 4 finished, and we're going to move higher up, similar to Bitcoin, but Bitcoin is a bit different structure. So that's why I see this in a different sort of manner. Now, after wave 3, we've had a correction down here, and this is also a correction. Okay, and this is the reason, guys, that I believe we're going to see another leg down. Because this structure here, from down here to up here, it's a clear ABC structure, okay? There is no impulse, okay? The impulse is in one of the waves, and it looks like a C, okay? And so in wave B, this ABC is an actual flat. Regular flat because we did the 90% over here, and just a marginal extension of wave C, which is allowed. Since then, we've fallen down, and we did like a move to the downside here. You can clearly see it's a 5-wave move. Okay, 1, 2, 3, 4, 5. Now, the problem and the debate is that that can also be seen as a 5-wave move, right? It can. But I want you to pay attention to this. 1 and 2, 3 and 4 and 5. We have a fresh high over here. So that gives me the option to call this an A. This is a B, this is a 3, and this is C. Okay. Now, with that said, 1, 2, 3, 4, and 5 for CO4, probably below the previous wave. Well, if that's the case, I would say definitely below that. And then continue the way up in wave 5. Pulled a simple channel over here, and this is what keeps me a bit on the sidelines for now. We've crossed above this channel. Okay, that doesn't necessarily mean much. Okay, it's just a false break perhaps. But if we continue higher and don't enter this channel territory and we break past the 522, well, it's very likely that we move higher. But again, moving higher doesn't necessarily mean our 4 is here. Okay, it can mean that this is W, this is X, and we're going to get Y. Okay, and my B wave is going to come higher up. Now, usually, as I said before, and guidelines say that a B wave can go up to around the 79%. We haven't gotten that yet. So that can easily be a W, X, and Y, a flat, a zigzag, and any other 5-wave move. A double 3, actually, I would call it. It's a double 3 instead. 79, 544. I think it's an important level. Okay, so in case we start moving higher, pay attention to 544. Now, the alternative is that we ended here. Yeah, and then we have a magical and very weird look in wave 1, and this is wave 2. This is 1, 2, 3, 4, and 5 it did. This is 2. Another weird look in ABC. This is wave 1 and 2. We're going to go for 3. Okay, if this is my 3 and we see increasing volumes, but the increasing volumes are on a resistance, then that means we're going to get 1, 2, 3, 4, and 5 for 3, then 4 and 5. Okay, and we'll continue higher and never to see that price again. Okay, that's the one alternative. As I said before, it means that wave 4 has finished here. The other one is that we've got deeper B and C, yeah, and then 4 and 5. And another potential one, which is very bullish, is as if this is an ABC, and this is an ABC, and this is going to be an ABC, and that is going to take us to the moon, literally. Because if that's going to be a leading diagonal, and this is what I'm looking here, that's why the ABCs work actually inside and out, then that's going to give us a huge move to the upside. But it means we need to stop around this diagonal line, trend line, yeah, and correct. Okay, so that also sees potential downside, a pullback before shooting higher. Dot. Dot has a similar look, but a different structure. Okay, dot, according to the wave structure, has finished primary wave 1 and primary wave 2. This is my main scenario. And guys, you know that, well, obviously and ideally, we look at the markets collectively. If Bitcoin and BNB fall, dot is not going to move up, is it? No, it's not. But I have to be unbiased from other charts and from anything when I do analysis. That's why I give you this, because it looks most probable than the downside. So with 1 and 2 done, we're heading up, okay? And this has two different variations. One is the one you see now, and I lean towards this one because usually corrections like this belong in wave 2 or 4, and the corrections in the yellow look very similar to one another, and time-wise and also price-wise, the guidelines are respected, which means this is minor wave 1 and 2. We have 1 in minute and 2, and internally we have a leading diagonal, which means that, you know, that is going to shoot higher. The good thing about this scenario is that the invalidation is very close, okay? The invalidation of this particular variation is at 37.50. If we break lower, when what the potential case would be here is that, you know, this is probably a flat. So my wave 2 would be here, okay? But then you have to ask, and I ask, if that would be the case, then most likely my 1 is here and my 2 is here. You might say, why? Because if we leave this here, my wave 2 in the immediate degree, which is higher degree than the minor degree, which is the yellow, only lasted 1 day, right? Yeah. Whereas the minor correction, which is of the lower degree, lasts like a week. So, you know, it doesn't really work like that. So if that is a flat, which means we're going to start moving lower down, go towards the swing low, then this variation is the one that we'll have to follow. Otherwise, if we don't break below 37.50 or so, this one is the one that we'll have to follow. Okay? Now, in case we start moving lower and lower, okay, we can come down here. I mean, nothing stops us. It means that we're going to get an expanded C in this particular flat. Okay, because we have this penetration above the previous high here. If it's false, then very likely to create a wave C, and that can be expanded. We can come lower, okay, and that low can be, well, around 20, 17, who knows? But we wouldn't want to go below the 20 because the 20 is a critical level for this potential upside move to be seen as more impulsive than corrective. Now, if we break past that level, lower down, then the probabilities of these not being wave 2 here are going to increase, okay? Which means that that's going to come here. That's going to be an ABC. Yeah. That's going to be another A, B, and C. Oops, excuse me. A, B, and C. It looks like triangle, perhaps. Let's see. A, B, C, D, E, or the A, B, C, D, E. Yeah, that's more likely. So look at this. A, yeah, then A, B, C, D, E. This is a triangle, and we're gonna get 1, 2, 3, 4, and 5, perhaps. Okay, or we might just turn lower now. But if we turn lower now, that as a wave 3 is looking weird. So most likely we're gonna do 1, 2, 3, 4, and 5. Okay, go a bit higher. We're going to have a wave B here as a triangle and a wave C, 5 wave move. Once we finish, we'll start moving lower. Okay? But that would be if we break below wave 1. So most likely we wouldn't know. So what we need to pay attention to, yeah, is where we are. How much have we corrected? Look at this. We've corrected 90%. So this is the ideal level for a wave B of a flat. And we have one ABC already here. So another ABC, and we pretty much expect for the impulse. So can we see this in a different way to assume that we have ended here? Of course we can. How? Probably not a triangle. So what would be the case is this is 1 and 2, this is 3 and 4, and that is a 5. And that is a diagonal. This diagonal, however, I'm not sure I like a lot because it has an extended 5. it can be overthrown, but it's a bit too much. Okay. So the other assumption is that, you know, this is simply a ABC over here. Okay. So we'll have like a running flat in this part over here, which means this is A, this is B, and this is C. So 1, 2, or ABC, you know. So ABC, ABC, and 1, 2, 3, 4, and 5. Okay. That would again take us back to the original though. Okay, so you can understand things are a bit complicated and a bit, you know, because the structure here is a bit confusing. So when the structure is confusing, that you have to know you are in a complex pattern or in a wave B. Okay, which again brings us a bit closer to the potential for more downside rather than more upside. Either case, guys, because we haven't talked about levels much. Well, if we go to 1 and to the current 2 for dot, of course we'll start from 0. I want to show you a couple of levels here. Okay. Okay, that's already there. So, okay, that's a bit too much. I think we need to take the log off. And the log off doesn't work. What about this? There we go. That's much better. So we're looking at 59, 72, 89, 108. And let me tell you this, we're still in wave 1, guys. So wave 2 could have ended or not. In either case, I think, you know, from 40 to do a new low, that's going to take us fourfold down, like 75% drawdown, right? It's big. Upside potential from the current price, if we say even the 100, it does not give us a 4x or anything. It gives us 2.5x or something. So the question is here, is it a good time to go in? Well, technically speaking, not great, technically speaking. But if we remain above 37.50, yeah, and I repeat, if we remain above 37.50, this is to be seen as biased up. Okay, so guys, that's all. I hope there is good insights shared here with you today. In case you like, click the like button, subscribe, and don't forget, in my channel, I go into a lot of detail. I'm doing 4 intraday videos on a daily basis. So spending maybe even 1 hour on the charts with the community, okay? Giving opportunities for education, trading ideas, learning technical analysis, the simple stuff and not the simple stuff and the stuff that you probably haven't heard. So hit me up if you want to join for a trial, and then you can make up your own conclusions. That will be all for now. Enjoy this video and drop your questions in the comments section.